Dear ladies and gentlemen, hello everyone, and welcome to today's webinar for Šiaulių bankas. I am Simona Bočkienė, account manager at Nasdaq Vilnius, and I am pleased to introduce today's host, the Chief Executive Officer of Šiaulių bankas, Mr. Vytautas Sinius, and the Head of Finance and Risk Management Division, Mr. Donatas Savickas. Firstly, the management of the company will comment Šiaulių bankas financial results for the first half of 2020 and guide us through the recent events in the bank. Right after the presentation, we will open the floor for questions. So let's begin. Mr. Vytautas Sinius, the floor is yours.
Good afternoon, ladies and gentlemen. Welcome everyone to the webinar of Šiaulių bankas for the first half of 2020 results that were released recently, with the main focus on the second quarter. So probably most of us felt that this quarter was one of the most memorable quarters in the last period, with lockdown situation, with a freezed economy, with the different type of new costs and risks emerging during that quarter. But so far, I would say both Lithuania as a country and Šiaulių bankas survived that period, I would say, very successfully. Talking about the country, I would say both on the COVID-19 directly related figures, country, at least as of now, passed this period without major figures compared to the other countries, both in European Union and worldwide. And as well, even more surprisingly, I would say the economical stand of the country showed and continues to show strong results. So you can see that information on the slide number 3, showing comparison of Lithuanian GDP development compared to the some of the countries. And as you can see, Lithuania's GDP has dropped in the second quarter compared with the previous period of 2019. 3.7%, and compared to the first quarter, minus 5.1%. So among other countries, Lithuania's development, I'd say, really strong, taking into account all the environment, and also other figures that are not presented here, like consumer confidence, also shows leading figures in the all European Union. So far so good. I would say we're coping well with this specific crisis, but it's not over. We need to be, we'll keep our eyes open, looking forward. So talking about Šiaulių bankas, also there was, as mentioned, very specific quarter for all of us, and despite all difficulties, we managed to generate, I would say, rather decent return, with a profit of 12.5 million euros in the second quarter, and giving 20.9 million euros result for the whole first half of the year. So you can see the development of net profit in the right-hand lower charts, and seeing that operating profits also stand at the strong figure 18.8%, which is even higher than the respective quarter of 2019. Provision level also was lower than we expected at the beginning of this crisis. So initial figures, both on a macro level and on our projections, much more conservative. However, currently we see that for the second quarter we have made provisions lower than we anticipated. and almost majority part of those provisions still were related with COVID-19 impact on overall our loan portfolio. Therefore, we could draw the conclusion that potentially our KPIs that were reviewed due to the COVID-19 impact for 2020 could be better. So we haven't made any new projections yet, since, as I mentioned, that the crisis mode, I would say, not finished yet in the environment, and we need to look how the coming period would look like. But as a guidance, we can give that most likely the KPIs could be better than were anticipated in our reviewed projections for 2020. So looking a bit more to the figures, net interest income was slightly better in the second quarter than in the first, and 10% better than in the first half of 2019. A bit more tensions with the net commission income, since some of the time in the second quarter we had low activity due to the closed branch network, or partially closed branch network. Impairment losses, as I mentioned, still higher than compared to the 2019, but compared to the projections, much lower. Such key ratios as a cost-income ratio, again very strong as of end of first half, stands at 39%. Capital adequacy ratio 18.7, and that's without interim results of 2020. So if we would add that result in the future to the capital adequacy ratio, this ratio would be even higher. And as a result of those figures, we have return on equity slightly above 13% for the first half of the year. So we can move on to the page number 4, when we have loan portfolio dynamics. So there are also different trends, I would say, in a portfolio. So starting from the general observation, we have a 5% increase in the second quarter of the loan portfolio by 88 million euros. So the main driving force for that was acquisition of mainly mortgage loan portfolio from Danske Bank, which was successfully implemented without any major issues. So we have to treat that project successfully completed, and that resulted in a strong development of the mortgage loan portfolio. And other areas like a corporate financing was not performing in that speed compared to the private individual loans. Therefore, we have a slight decline of our corporate financing portfolio by 2% quarter on quarter, but still we have the growth of 6% compared to the same period of 2019. I would say development of corporate financing portfolio in some part was in our projections before, because the previous period was very intense for Šiaulių bankas. If we remember 2017, 18 and 19, we have very strong growth, much higher than the market. Therefore, we started a bit to be much more cautious accepting new exposures in the previous quarters, and that and additionally the COVID impact on the second quarter influenced the new loans originated by Šiaulių bankas, and this figure stands at the rather low level of 67 million. But if we add on those loans that were provided under the state aid program, we would have more than 100 million originated loans by Šiaulių bankas in the second quarter for corporate clients. Consumer financing, I would say, rather flat during the second quarter. So knowing the sentiment of people, I would say is still quite good, because uncertainty was high, and to compensate, amortizing portfolio and keep the same level of consumer financing portfolio, I treat as a good result. Mortgages have already touched, but the figures are impressive. If we look to the combined result of acquisition and organic growth, we have 280% increase on portfolio during the year. So we strengthen our position in the mortgage segment. Other loans like renovation, like repos, like municipalities have declined during the second quarter, 3% quarter to quarter and 10% compared to 2019. So summarizing, I would say, as a general trend in the market, not only in Šiaulių bankas, we see that the corporate portfolio has a tendency to decline in the second quarter, but this decline was compensated by state aid related with the COVID, as a response to the COVID-19 crisis, where Šiaulių bankas participated also as a strong partner for the state institutions. Page number 5, a bit more information on loan portfolio breakdown. So with that breakdown, I could give the message that Šiaulių bankas continue to diversify its loan portfolio, and seeing a much stronger bigger part of private individuals, as 27.7% of our loan portfolio, which is again split into rather different segments of private individual client risks, like renovation, consumer financing, mortgages. So even with individuals, we have pretty strong diversification of the portfolio, and as well as from the corporate client perspective, no strong dependency on any of economical sectors. And also the trend of top 10 exposures going down. At the end of the second quarter, we have 12.5% compared to the 17 at the beginning of 2018. Of course, we continue to monitor development in each particular sector, and especially in this time when the COVID impact of the portfolio is important. So we, despite that we historically supervised more sectors like real estate, construction, transport, additionally we treat it as a high risk some part of the trade sector, hotels and restaurants, education, healthcare, social work, and etc. So some of the sectors, due to the COVID-19, became a bit more riskier. Therefore, our attention to those sectors is additionally paid. Page number 6, private individual financing through the mortgages and consumer financing. So just to emphasize once again, on the 1st of May, we completed the acquisition with Danske Bank, and portfolio, I would say, doubled during this transaction. You also can see in the slide the yields of the newly signed agreements and the mortgage portfolios. I would say it's rather high comparing with the market average. So we have close to 2.5% both current portfolio and newly originated mortgage loans. Definitely due to the situation on the second quarter, we had decline in the in the new applications on the mortgages close to 60% compared to the average of the first quarter. However, I would say rather unexpectedly, the activities and sentiment of private individuals borrowing new mortgages came back during the second quarter, and currently we could see figures even close to the pandemic situation. And I would say that trend is not only with Šiaulių bankas, but with the sector in general. So mortgage market, as well as a private real estate market, rebounds quite successfully as of now. So let's see and view how the situation will develop in the rest part of the year. Talking about consumer financing, as I mentioned, the portfolio remained flat at the level of 462 million euros. But still, I would say the results of the new agreements generated during this difficult quarter compared to the previous quarter was still, I would say, rather okay at 27.2 million euros. And again, the situation is picking up, so seeing the confidence of private individuals, seeing the future rather positive, we expect that it will also reflect in the consumer financing needs. Page number 7, low portfolio quality. I would say especially important element and theme in the current environment, and more and more focus we pay considering how the situation will develop further. But as of now, we can just highlight that that the provisions mainly related with the COVID at the level of 3.4 million euros were recognized in the second quarter. So in total, we have 6.4 million euros of provisions related with the COVID-19. So it mainly comes from the macroeconomical adjustment and the sector-related adjustments. So it means that in case of rebounding of economy and not giving too much negative impact to the individual assessment, that's a reserve made in our P&L. Of course, if there are some exposures in the future, we'll converge to the NPE, so we'll have some cushion that could be used to form individual provisions. So as you can see in the pie charts, that 75% of provisions formed during the first half are related with the COVID impact, and only 25% related with individual positions. So again, talking about a cost of risk, with the current figures, we stand at the annualized 1% cost of risk level. So I would say again, this at the level of our estimation of cost of risk through the cycle. So definitely we need to see how the situation will develop further in the coming quarters. But as of now, being in, I would say, midst of the situation, I would say we still have relatively low figures compared to the through the cycle consideration. And potentially after the crisis, we can even review our estimations in the future about cost of risk due to the growing Šiaulių bankas portfolio, bigger part of the private individuals, and hopefully lower level of estimated cost of risk ratio in the future. But definitely we need to go through this whole situation and then to make a reassessment of the situation. So cost of risk for the second quarter was at a level of 0.8%, and the first quarter, just to remind, was 1.2%. So again, our estimation made in I think April with a bit more negative figures potentially could be too conservative looking from today's perspective. But let's wait and see how the situation will develop in this quarter. Talking about loans past due and NPEs, I would tell that situation is I would say really good enough. So far, so good with the figures with the second quarter, with loans past due more than 30 days at 3.6% and NPE ratio at 5.1, and seeing also the not only the relative figures but absolute amount of loans past due and NPEs, which still can observe that there is no trend to grow, and we have rather stable situation despite that a period is very volatile and uncertain. Yeah, probably there could be some impact of the moratorium applied to the clients, but I would say that the impact of moratoria to the NPE and loans past due is minimal. So it's not that important looking to the trends. And the last chart I wanted to touch is the loans by stages. So as you can view on the chart, that the second stage 2 increase continues compared to the first quarter, but the stage 3 is flat at the level close to 92 million euros. So again, there is no as of now signs that loans migrate to the non-performing loan group. So summarizing, I would say so far so good. Situation is not reflecting any negative trend as of now, but we need to go through this period till the end. Good. Page number 8, response to the COVID-19. So just to remind that the moratorium has been signed at the beginning of the crisis, and it was prolonged till the end of September. However, the impact of moratorium, I would say, is diminishing. The beginning was very intense. So the first month we had the most of the clients applying for the, some relief on the repayments of the loans. However, current period and even part of the second quarter was relatively calm, and the figures that were generated, so they were generated at the beginning of the quarter. So we have approximately 235 million euros that has been deferred repayments for the client, both private and corporate. But the lion's share, as you can see, comes from the corporate clients, 227 million, and private individual part is relatively low. And just to remind that at the bank we applied the conditions of moratoria, giving a deferral period for mortgages up to 12 months, and for consumer loans and business clients up to 6 months. So we coming to those periods, especially with the corporate clients, and in the third quarter and the beginning of the fourth quarter, we'll see how the behavior of the clients will develop, and we'll make more conclusions with the end of a moratoria that was made at the beginning of the second quarter. Additionally, I would say I could mention that Šiaulių bankas actively participated in the state business aid programs. So at the beginning, we were one of the most actively, working with the different state institutions, creating programs, how to help businesses to go through this situation. And I'm also glad and thankful to the colleagues that we made our contribution most visible among other banks. So talking about loans that we granted through Šiaulių bankas network from the state funds in the amount of close to 47 million euros is the largest among other banks. There are some financial technology institutions that were also participated actively, but among the banks, Šiaulių bankas was the most active player with more than 500 clients that has been supported by those funds. And most of those clients are new for Šiaulių bankas, so we'll be happy probably continue cooperation with them in the future. And also Šiaulių bankas, without that big, amount of disbursed loans, participated in another program which is related with portfolio guarantee, but the amount is a bit lower, about 7 million euros. So this program was not that much intensive as the first one. So this state fund loans, they are finished. They expired at July 20. So we already see the final results out of that. Talking about daily banking, page number 9. I would say, just summarizing, I could mention that it's good to have pretty well diversified commission income splits in this difficult time, and not being dependent on one or few particular type of commission income. Therefore, even with the lower figures compared to the previous quarter and 2019, I would say we still stand with a pretty good commission income in the second quarter. So most impact or negative impact we got from closure of, I would say in some part of the time of about 2/3 of our branch network. And that influenced mainly the cash operation, also payment services, account administration. So that period was naturally with low activity, and that reflected on our fees and commission. However, starting from the June, we are open in full, and volumes are coming back to the pre-quarantine level. So we expect commissioning income to develop accordingly. Also, we observed that a natural observation, I would say, that most of the client during this lockdown period applied to our electronic channels and contact center. So I would say the contact center staff has been increased 3 times using staff force from the branch network, and we managed rather successful with switch from branches to contact center. And we continue to observe that high activity of the clients remain in the digital channels, and that's the area for the future to continue to be focused. Therefore, as one of the bullet point mentioned in the presentation, we upgrading our mobile application, which will be launched in the second half of this year, and also working with the upgrade of our e-banking solution to have as modern as possible in the coming periods. Okay, page number 10, Treasury operations. Talking about foreign exchange revenue, again, impact from COVID is visible. So the result is slightly lower than 2020 first quarter, and also slightly lower than the respective period of 2019. So naturally, closure of branch network and less people using cash and need of exchange reflected on lower income. So probably part of that will not recover shortly due to the lower tourism flows in the country. But on the longer run, we expect it will come back. But with some adjustment with the pricing, we still remained on relatively good commission income, good income from foreign exchange during the second quarter. Much better results were on the operation with securities. And the impact comes from mainly rebound of bond markets in the second quarter, and additionally realization of securities from our banking book that were realized in the second quarter. So the result of 2 million euros for the second quarter out of the operations with securities. Funding on the page 11. So probably least impacted by the COVID parameter of our activity. So the funding remained with a good trend of growth, with 7% increase from the beginning of this year by 134 million euros. There is still some shift between term deposits and demand deposits. The latter ones increased by 161 million euros. And after the transaction with Danske Bank, our loan-to-deposit ratio grew to 81%. So it's even more balanced than in the previous quarter. Talking about cost of funding, it's rather flat at the level of 0.45%. And the last point worth mentioning is our participation in the ECB program called TLTRO3, where we can borrow up to 570 million euros. And part of that already was realized in the second second quarter of this year. So we borrowed 150 million euros for 3 years term and successfully invested in the government securities and prepared ourselves for the future funding needs of Šiaulių bankas, expecting the growth of the loan portfolio. Well, also just to mention that we have continued cooperation with the Raising platform, but this period was not of a major need, especially having the organic growth in Lithuania, as well as this TLTRO3 program allowed us to not be aggressively pricing ourselves in the Raising platform. Therefore, our activity remained rather low there. Capital and liquidity on the page 12. Again, strong parameters both. To summarizing, I could say that they are continuous to show strong resilience both from the capital perspective and from the liquidity. So the reduction of capital requirements from 12.4% down to 9.4% creates very substantial buffer compared to the actual ratios of Šiaulių bankas, which at the end of second quarter, as we have preliminary data, could mention stands at the 18.7%. So as recommended by the central banks, both in Lithuania and ECB, to create a solid buffers in this difficult time. Šiaulių bankas, I would say, have this in our books and ready both for the potential shocks, if any, emerge in the coming future, or to have ability to disburse in the future part of the accumulated capital for the shareholders, or to see opportunities in the future to more rapid growth. On a liquidity position, impact of Danske Bank, as were mentioned already some time ago, it was rather insignificant, but 50 percentage points. So our liquidity cover ratio still stands at a decent level above the minimum, and again, seeing current trend continues to grow. Recent major news from our side is the active work with the European Investment Bank, which chose Šiaulių bankas to establish a renovation fund in the initial amount of 2 million euros. So we are now working intensively with establishment of that fund and talking with different of the potential stakeholders in this development. So we try to capitalize our knowledge and experience that we gained in 10-year history of working with renovation and participating in different structures. So I'm confident that we will develop this instrument as well for the future of renovation projects, and will support both state and individuals with additional funding from this fund. But still, this under construction, and most likely by the end of this year, we could have some news on that field. Another worth mentioning news that we continue to integrate our subsidiaries closer to the bank group. Therefore, one of the steps were made with our life insurance company, renaming that to SB Draudimas, in English SB Insurance, and anticipating more abilities to work closer with the bank and to expand further sales with the bank's bank channel. And also our life insurance company is now working on the new sales portal, which will be launched in the first quarter next year. That would allow much more efficiently to work with the both employees of Šiaulių bankas and the third-party agents that are providing life insurance services to our clients. And last but not least of the development of Šiaulių bankas is the strengthening of our management at the supervisory council level. So 2 new members, experienced independent experts, has joined Šiaulių bankas. So in total now we have 8 members, 5 of whom are independent. So I believe with the expertise of new colleagues at the supervisory council, we'll continue to strengthen a bank. And also worth mentioning that we have intensive work with and dialogue with our supervisor, directly ECB, that also plays positive impact of continuously improving and growing our focus on a corporate governance, on the risk management at Šiaulių bankas, making more and more strong and resilient to different type of shocks bank's procedures and risk management tools. And the last slide before the questions and answers related with some stock-related topics. So first thing I'm glad to mention that new stock coverage has been launched by SEB in June of this year. So in total, we have 4 houses who follow Šiaulių bankas and give some indications and views on our stock. So the last one is made by SEB, stands at this 0.65 share price. As you can see, also some of them like LHV, they put it as under review, so there is no latest news as of now, but hopefully in the nearest future we'll have some indications by the and updates by the other players as well. Also, I would like to mention and to show that we're really happy with the turnover of Šiaulių bankas shares. I mean, it reached extremely high level looking retrospectively some years ago. So current level of trade during the 7 months of 55 million, it shows that Šiaulių bankas continues to be leading stock in the Baltic Stock Exchange, being the most liquid, and having the level of 400,000 euros average trade a day. Some time ago, it looked like a really nice figure to achieve, and we have it already now. So I'm really proud and happy about this level of activity with Šiaulių bankas stock, and just summarizing and giving some focus on some key ratios. I would say with a strong net income margin that stands at 3.2% with a slight increase, with a return on equity 13.2% of the first half of the year. Also, it's a rather efficient way of running business with cost of income ratio of 40% and a capital adequacy ratio close to 19%. Compared to comparing Šiaulių bankas ratios with the peers, I would say we look as a pretty strong and attractive institution. And I hope all this uncertainty with the pandemic will bounce back, and our price to book value that now stands at quite discounted value of 0.7 will come back to the much higher figures. So I wish that for colleagues and friends with Šiaulių bankas and all investors, that we will be priced at a higher levels. So I think that's it for now. I'll stop and wait for your questions. So thank you.
Mr. Sinius, thank you very much for your presentation. Now we will proceed with the questions, and the first question was received in advance about dividends. When dividends should be expected to be paid?
Yeah, I'll try to answer that. Still, I would say question is, of course, important for all the shareholders. However, it's still midst of the year, and it's hard to predict when all will be over and we'll be ready to consider and propose dividends to the shareholders. Looking to the current figures of Šiaulių bankas, as I mentioned during the presentation, we feel strong base of our capital reserves, and that shows that looking forward, if the situation is not deteriorating, we will have pressure to release some capital to the shareholders. However, current environment and the messages from regulators, which is just recently also were renewed by the ECB, that they are not willing to see any dividend payouts during the 2020, gives us also indication that most likely we will come back to this question at the end of this year and the beginning of 2021, where our situation will be more clear. We'll see how Šiaulių bankas, balance sheet and P&L looks like, and then we'll much clearly could draft our view in that, seeing what's happening with the regulator, how they treat the situation, and to make the right judgments at that time. So most likely I would assume that this question will be discussed at the end of this year and the beginning of next.
Thank you very much. Are there any news on strategic alternatives analysis?
As strategic alternative analysis has been started when the situation was much different than we have now, and still we are new at the ECB, and we still continue to work with them and to consider when the AQR process will be launched. So that was one of the reasons that we postponed or delayed our strategic alternative review. Then the COVID-19 situation has come, and it's still in place. So still those two topics that are prioritized from the management perspective. But once the situation is clear with those mentioned things, I believe we'll come back to the strategic alternative topic and give much more guidance to the investors. But firstly, we need to cope with this, COVID situation, as well as with a comprehensive assessment, which is not yet performed due to the COVID with the ECB.
Thank you very much. We have another question. Do you have any number in consideration what amount of impairment losses could be regained if there is no serious second wave in COVID-19 and the end of 2020 is under the consideration?
I take this question. So hello, Donatas Savickas here. So we have quite wide range of numbers depending of scenarios what we are forecasting for the outcome or continuation of COVID-19 crisis. So if in your question was a scenario that there are no serious second wave in COVID-19, so probably then our models forecast that we could end up 2020 forecast and 2020 cost of risk in the range of 1% or slightly below. For those who is more comfortable with not expression not in cost of risk but in million of euros, so I would say that that correspond figure of mid-teen million, so in the range of 15. But again, as Vytautas mentioned earlier, so it's a wide spectrum of scenarios, and depending how the reality will develop, so it would be, we will adjust our actions accordingly.
Thank you very much. Next question. There have been news in media that the government could be locally operating bank. Could it be Šiaulių bankas?
Yeah, Vytautas here. That's, I would say, early question to discuss. I mean, the political process started of discussions about this state-owned bank. So we're anyway not participating in this discussion. So it's too early question to be discussed. So I would not comment more on that.
Thank you very much. Is the decrease of new mortgage agreements amount because of stricter requirements, larger down payment requirements, or because of lower demand?
I probably take this, and this lower level of new agreements in second quarter, I would say the main reason was the physical unavailability for the branch network, and therefore the access for the banking services was lower in the second quarter. Therefore, the new sales was low accordingly. But as we talk with the people who are in that business directly, they notice that quite significant bounce back in the later months of second quarter, and now in the third quarter we see quite big demand again, what was seen before the crisis.
Thank you. Next question. How big is the client concentration in terms of your current NPLs?
Okay, so whether it's high or low, I leave to decide for audience, but I can say that, for example, the top 15 of our NPLs correspond 50% of total NPLs. So I would say it's quite concentrated, but talking about the coverage of each NPL, so it covered significantly, either by provisions or by collateral for each particular exposure.
Thank you. You managed to reduce staff and other operating costs in quarter two. Did you cut salaries, and what other cuts impacted the result?
Yes, Vito is here. So yeah, we did some as we're planned in our adjusted budget for this year. So we've made some changes in our costs levels. So not only salaries, but also the other ones, like we slow down our refurbishment of the branches. So we continue, but with not that projected speed as were initially considered. The staff costs, we haven't cut the salaries as such, so we just reviewed our projected increase, and there was some lower variable parts accumulation applied during this period. So that was the main saving reasons on the staff cost side.
Thank you. When Šiaulių bankas is planning to start buying back the shares as per shares buyback program approved in the last shareholders meeting?
So on that question, I probably not expand a lot since it's have actually similar observations and conclusions as related with the dividends. So as of now, I would say that we're not in a position to make any active steps in the current periods with uncertainty, talking about buybacks. Therefore, I would move this question into the future when the situation is much more clear, and the view from the regulator is also formulated differently than as we have it now.
Thank you. Have the bank already received MREL target? If yes, would it be disclosed?
Yes, about target for MREL, probably the correct spelling would be. So yes, we received, and yes, we disclosed. It was, if I remember correctly, it was disclosed in the end of 2019, and the level of this MREL is 15% of total own equity. So that level is manageable, and it should be implemented in the period of 4 years. So right now we are in the process of preparing the proper instruments and the timing for this to achieve. That would be answered.
Thank you very much. Do you expect lower impairment losses for Q3 than Q2 of this year, as July has passed already?
This question of about impairments is the hot topic in the audience, and we also discussing a lot. And I already answered in more broader sense, but now it's more specific regarding the Q3. So yes, the first months of already passed, and we don't see any signals, worrying signals. At least we didn't see in the until week ago. Right now, the situation is likely going to the worst stage, but how it will develop further. So we see that the movement could be very sudden and very significant. Therefore, despite the fact that first months already passed, I wouldn't go for the exact forecast for the third quarter, despite that it's very close and we are living right now in this period.
Thank you very much. The last question so far is what normalized level of return of equity and net interest margin do you expect?
Okay, again, about similar, but from the other side. So I could repeat our initial targets for 2020. What was disclosed after first quarter was that return on equity in the range of 8% or more. Now we see after 1 quarter the more promising and more optimistic results. But we could end return on equity for full year in the range of 8%. In the worst case scenario, even lower. But in optimistic, we could be in the double-digit figures for return on equity. So broad range, again, depending on a lot of factors, but the most important factor would be development of COVID-19 crisis. And the same net interest margin. So that probably not so volatile, and we don't see that significant risk of deterioration of net interest margin. So we, as monitoring the last probably 2 or 3 years, so our net interest margin slightly increased, mainly due to the lowering funding costs, but we don't see the further room for improvement from that side. On the yield side, so again, it's not realistic to expect increase for the yield. So that comes to conclusion that our main scenario is that net interest margin will remain stable as it is now.
Thank you very much. So the time is almost up, so we will wait a bit to take your last question, if any. And we received question about return on equity. What about return on equity in long term?
Yeah, so Vytautas here. So return on equity on the longer run, despite that the crisis of COVID-19 made some adjustments in our this year projections, but on the longer run we tend to keep our promise of 15% plus return on equity. Despite that the bank is growing, I mean that the capital is also growing, and the challenge of making 15% return is becoming tougher, as well as the growth of such instruments as mortgage is also growing, which is not that high margin business, but still delivering good return. So our, as a management team, objective is to continue, despite that the bank is growing in the medium term quite fast, to keep the level of rather high 15% return on equity in the nearest future.
So all questions are answered. On behalf of Nasdaq Vilnius, thank you everyone. It was a pleasure being with you today. A record of the presentation will be available in the Nasdaq Baltic YouTube channel webinar playlist and on the website sb.lt. Mr. Vytautas Sinius and Mr. Donatas Savickas, thank you very much for your presentation and for answers given. Participants, thank you for joining. Everyone, have a good afternoon.